Prashant. But I think, I mean, just to get back to that point, a lot of people that I know around me have just thought that this is the Russian roulette. This is it. You put in money 2020 and everything goes up 20, 30%. I think the market teaches. And for some people, I think those lessons perhaps would be well learned now.
Yeah, I mean, I think Tahir made some excellent points. So, I mean, keep it at the back of the mind that this is not 2022. This is a different market. Well, let's move on. The Nifty, by the way, has come up a little bit again. We're up about, what, 15, 16 points, 17,176. Now, we have someone with us who is exactly the person to speak with when we've got this macro market troubles globally, big moves, especially in the rates market, etc. Shankar Sharma is with us now. He's founder at GQuant Investec. Shankar, great to have you with us here. Thank you very much for your time. Appreciate it. So, your perspective, Shankar, you know, what we're seeing in the US, does it feel like this is going to get much bigger? Or do you think this will get contained? Markets have sold off for a week, and then after that, we kind of move on. Something similar to what we saw recently with the UK pension fund thing. Market sold off back then, Bank of England infused liquidity, and life kind of moved on. Your sense, go on.
Right. My sense is I don't think this is going to turn into a large-scale contagion. And, you know, and a bear market is always a great disinfectant. When you have a bear market, which is why I love bear markets, you know, it brings out all the things that have been covered up by, you know, all kinds of central bank-led fraud or corporate fraud or, you know, fraud by domestic governments. You know, a bear market, you know, is very, very brutal, and it brings out all kinds of these hidden you know, sort of warts in the system. And SVB is a case in point. I mean, we know that the whole VC landscape was all completely nonsensical. I mean, we've spoken about it, you know, from the time the last crisis happened, you know, the ultra low rates basically propelled money towards the riskiest part of the market, which is the VC market. And, you know, that led to all kinds of unmerited businesses burgeoning, and people either giving equity or debt also burgeoned alongside. And SVB, obviously, you know, was the beneficiary of that boom, and suddenly we found that it wasn't so. I don't think this is a structural problem that it affects, you know, banking in general in the US. You know, we had calls in the last week or even yesterday. Some of the banks were down, but the quality banks like JPM, when I last checked, was down only 1% or so yesterday. So I think the markets will discriminate. And they are doing that already. I don't think this is a large-scale problem. But the problem still remains, which is that we are in a bit of a pickle on the growth front globally, and of course in India. In India as well.
So when you say, Shankar, good morning. When you say, I love bear markets, are we in a bear market? I mean, how long, how treacherous, how painful is it going to be, you think?
Well, so the bad news is that we are not in a bear market, so we could head into one, but I don't think we are heading into one. So I think if you're talking India, which I think we are, I don't think we are anywhere close to being in a bear market. I think we are still okay. Of course, you know, we will, you know, give up some relative gains, which we found over the last, let's say, 12, 15 months when we beat the rest of the world. I think structurally, India is far, far better than most other countries, you know, in the world, which will ensure that we don't have a bear market. Whether we have a roaring bull market or not, now that is a larger question. And I think the answer to that is that it's a clear no. I do not think we are going to have a roaring bull market. I don't think anybody rational should hold out that hope. It's a problematic market. India will do better than the rest, but whether the Nifty or the Sensex will deliver you 20% in 2023, I don't think that's going to happen. But that said, let me rewind a bit. Last year, we had a similar problem around this time, right? Which was the Ukraine war started, I think February, March. And the market sold off in the next 3 months' time up until, I think, June. June was the bottom. You know, in that period, in those 3 months, I did a little experiment in which I put together a little portfolio of stocks which beat the market on the way down, small cap companies. And I was reviewing that list just like a couple of weeks back. And trust me, that portfolio has beaten the daylights out of the market. So the lesson or the model behind the story is that for investors, this is a very, very good time. Let the markets grind their way down, which I think they will. Maybe whether it's 10% or 5%, that's debatable. But they will grind down. They're not running up anytime soon. But the companies with good numbers and relative strength in stock prices, build that portfolio from now up until the next 3 or 4 months' time. I think like my experience, your experience is going to be fantastic as well.
Okay, Shankar, that explains your tweet just before the show, right? You were saying you're in a good mood. So I guess I take that, that you need to build your portfolios. That's what our previous guest was also saying. But okay, let's talk about...
You look familiar.
I'm glad you still recognize me. Great to be having this conversation with you. It's part of the joy that we have being market journalists and business journalists. So great to be here. So Shankar, okay, help us and, rather investors around the country. How do you start building that portfolio? I mean, for the life of me, for starters, have not been able to understand why people are selling down Indian bank stocks as if there's a crisis here. It's a lot of it is probably sentiment, but where do you start? There's IT, which is exposed to the US, and there is the CapEx story, but stocks have already run up, the likes of ABB, Siemens, metals, again linked to global. So how do you start building that portfolio?
So, Surabhi, I'm very clear, as I just said, there is no broad bull market that we can play. There is no broad bull market. There's going to be a narrow bull market. Okay, so let me give you a bit of history. Whenever you have a bear market or sideways market or moderately down market, it doesn't mean that there are no opportunities to make money. The only thing is that in a bull market, maybe 70-80% of the stocks go up and 20% of the stocks, are flat to down. It's exactly flipped around in a relatively bearish or a flattish market in which 70-80% of the stocks will deliver you flat to negative returns, or maybe 90% will, but 10% of the stocks actually do fantastically well, even in that so-called bear market. We are heading into a situation where we'll have fewer opportunities to make outsized gain, but it doesn't mean there are no opportunities, just that we will need to work harder. So the stocks or the sectors you're talking about are all big macro trades. And when there is no macro bull market, I think we are better off ignoring the big macro trades. I'm a big macro believer. But when I see that the macro trade is not going to work, I'm not going to waste my time looking for a banking play or an NBFC play or a metal play, because I don't think we're going to make serious money there. We are going to make serious money playing India for India. And which means playing India on a local basis, companies serving the local markets, companies serving their neck of woods. That is the way you're going to make money with niche businesses, niche products, smaller companies. They are not going to get anything which will give us like a $10 billion company becoming 30 billion.
Any
That's
examples,
we are not in
Shankar?
that kind of market.
Shankar, any examples with obviously due disclaimers? I mean, there might be companies that you're interested in or invested in, but any examples?
Oh, there are many examples, Surabhi. I mean, I bought a company last year, for example, in the downturn that I was referring to between March and June. And I think it's up about 70-80% from the time I bought it. And it's an interesting business. It's a subsidiary of a global MNC, very small company, but subsidiary of a global MNC, good governance, good numbers, fantastic ROEs. Still trades at 15 times earnings, and a product that I use personally, so I know a bit about it. With a globally scalable business, and the stock is still undervalued. And when you run screeners, you will find stocks of that kind popping up all over the place, in particular markets like this. So, I'm really, again, I repeat, I'm spoiled for choice in India. I'm really spoiled for choice. There are any number of companies to fill a 25 or 30 stock portfolio between 500 to 3,000, 5,000 crores of market cap with earnings visibility of 12 months minimum and valuations which are not demanding by any stretch.
Got it.
Just work a bit hard. You are going to...
I think the only problem and the bigger question here is, should you be looking to buy those stocks now? And are you still bullish on small caps or non-index, say, mid caps, non-index large caps at a time like this? Or is it better to just stick with the large caps because of, all the challenges that's brewing globally?
Well, large caps haven't covered themselves with glory lately, have they? We had a big large cap, part of the market which imploded just like 45 days back, Sonia. So, there's no comfort in any part of the market in a problematic market. I'm saying please go out and start to buy even now. Now is a good time. Tomorrow is a good time. Next week is a great time. You will not be able to get a perfect entry into good companies, but there are many out there. But I just want to underline one thing, and that's very important. Let's be clear about this thing. 2023-24, which is the next financial year, India's GDP numbers may surprise on the downside. Okay, that is my take as an analyst. What that tells you is, again, going back to the point that we are not going to get big, broad bull market because, 4%, 4.5% GDP growth, which is what I think we will end up at, while the estimates might be 5.5 or 6%, I doubt if we are going to get there. I think with 4.5%, you're not going to see a big bank nifty rally or a big, consumer rally or, the big macro trade rally in India. So I just want to be very specific that GDP growth in India probably will surprise on the downside rather than on the upside.
Sure.
I could be wrong, and I hope I'm wrong, but it doesn't look like that, looking at the last data print and looking at estimates even for the Jan-Feb-March quarter.
Okay, so you've confused us a little more. I mean, don't expect a bull market, but there's not a bear market coming either. So I guess, you just have to...
So Sonia, Prashant was talking about a 3-year flat market. I mean, and let's hope and pray we don't get that, right?
No, I mean, most definitely no, Shankar. We don't want that. I was saying, there are difficult markets to report on, and I guess making money as well, right? I mean, unless, of course, it becomes very, very narrow and very, very stock specific, but that's what you're expecting. Not for 3 years, but for some time here in India. Sorry, go on.
For sure. Absolutely. For sure.
Okay. All right. Shankar, we'll leave it there. Thank you very much for joining us. Great conversation as always. Appreciate your time here on CNBC TV 18. Thanks indeed.
Let's just decide now not to draw any historical comparisons from now, right? Otherwise...